Hey everyone, welcome back to Corporate Decoder, the place where we decode the confusing world of business filings, and today we're looking at an airline that is feeling the turbulence, Southwest Airlines. Get ready for some bumpy flight predictions. Before we dive in, if you're finding value in these deep dives, hit that subscribe button and the notification bell so you don't miss out. Also, we've got an active Discord community linked in the description where we break down these reports even further, so come join us there. Southwest Airlines has just put out a report and it seems they're updating their expectations for the full year. They're talking about their earnings before interest and taxes, excluding special items, which is kind of a fancy way of saying their core profit. Now, they were expecting to make somewhere between $600 million and $800 million in profit for this year, but thanks to some headwinds, they're now looking at bringing in closer to $500 million. That is a significant drop from their earlier estimates. So what's causing this adjustment? Well, the report points to a couple of main culprits. One is lower revenue because of a government shutdown. Think of it like this: when the government isn't fully operating, people tend to travel less, impacting ticket sales. The other major factor is the squeeze from higher fuel prices. For airlines, fuel is a huge cost. When it goes up, it eats directly into their profits, and it looks like this has hit Southwest harder than they initially anticipated. The good news, or at least the less bad news, is that after that temporary dip in travel demand due to the shutdown, bookings are back to what they were expecting before. So the immediate future looks a bit more stable in terms of people wanting to fly with them. Now, let's glance at their stock. Their common stock is traded on the New York Stock Exchange under the ticker symbol LUV. It's worth noting that their overall financial health and these updated projections will directly influence that stock's performance. It's important to understand this. EBIT figure they're reporting. They define it as earnings before interest and taxes, excluding special items. They also clarify that it excludes gains or losses from things like selling off parts of their fleet. They believe reconciling this GAAP number to a traditional GAAP number for these future projections wouldn't be very helpful or even possible easily. Essentially, they're trying to give us a picture of their ongoing day-to-day profitability, stripping out one-off events. Looking ahead, Southwest, like all airlines, faces a long list of risks. They're talking about things like disease outbreaks, severe weather, natural disasters, and even acts of terrorism or war. All of these can really shake up travel demand and impact their business in unpredictable ways. Competition is also a big one. They mention pricing, scheduling, and capacity decisions by other airlines. If rivals offer cheaper fares or better routes, Southwest has to react, which can affect their own profitability. And of course, fuel. We already talked about how higher prices are hurting them now, but the report flags continued volatility and availability of fuel as a significant ongoing risk. It is like having a constant cloud hanging over their budget. A really critical point for Southwest is their heavy reliance on Boeing for their planes. Not only do they need timely deliveries of new aircraft, but they're also waiting on certifications for specific models, like the Boeing MAX 7. Any delays or issues with Boeing directly impact Southwest's ability to grow and operate efficiently. Labor is another area they are highlighting. This includes their ability to hire and keep enough qualified employees. Airlines are very people-intensive businesses, and any disruptions with their workforce can have serious consequences for flight operations and customer service. This report is signed off by Tom Doxey, who serves as the Executive Vice President and Chief Financial Officer. This tells us the numbers and outlook presented here have been reviewed and approved by the company's top financial leadership. So, what's the big picture here? Southwest is navigating a really challenging environment. The government shutdown and higher fuel costs have put a dent in their expected profits for the year. While bookings are recovering, the risks they've outlined, from geopolitical events to their dependence on suppliers like Boeing and managing their workforce, are substantial. In my view, Southwest is showing resilience by updating its guidance rather than ignoring the problems. However, the fact that their core profitability is being so directly impacted by external factors like fuel prices and government actions highlights a potential vulnerability. Their reliance on Boeing also remains a watch-out, as any hiccup there can have a ripple effect. The company's direction seems to be focused on managing these immediate pressures while also planning for the longer term, which includes fleet modernization and operational efficiency. The opportunity lies in their strong brand loyalty and the return of booking demand, but the risks are significant and require keen management. Overall, Southwest is in a tough spot, but they're communicating it openly. Investors and travelers alike will be watching closely to see how they steer through these turbulent skies. Alright, that is our breakdown of Southwest Airlines' latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and of course subscribe for more deep dives into the world of corporate finance, and don't forget to check out the Discord link in the description. Thanks for watching, see you next time.